Okay, guys, so we're back. Diamant's Capital YouTube channel is going to be consistent from now on. I want to be uploading value. Every single time I upload, I want to be addressing a lot of the issues that many traders have. You know, the one thing I've realized is traders, they struggle in... So they understand the basics. Everyone knows SMC knowledge, right? There's so many YouTube channels out there that teach the same old crap, in all honesty. But it's come to the point where traders actually struggle to put that knowledge into a strategy. This is why I've made it my goal in 2024, basically give out as much value as possible. So down below, I've put a completely free 7-module course, going from the very basics, as many people would want to know as a beginner, but then getting into more advanced topics. And the one thing that people are genuinely missing is a real in-depth understanding of liquidity. So I've called it the Liquidity Concepts course, completely free. You can get it down below. But anyways, throughout these videos, especially on YouTube, I want to be getting into some of the more advanced topics that can actually impact your trading. So in this example, or throughout this video, I'm going to be talking about liquidity and how to actually use it. There's going to be a few tips in this that I genuinely use every single day in my own elite strategy. But yeah, 1 to 3s, 1 to 4s risk to reward is genuinely what I'm hitting almost every single day. You know, even yesterday, for example, 1 to 6, we can look at Euro USD throughout this entire week, been really, really good. But yeah, when it comes to liquidity, a lot of things that people don't understand is this. Previously on my channel for the past 2 years, this is why I'm completely revamping everything. You would understand there's a few different types of liquidity, right? So you've got the basics. Of course, you've got equal highs, and then we've got equal lows, for example. So this is type 1, as we all know. So from this, you understand that liquidity is going to be resting above, and then liquidity is going to be resting below. This is type 1. Then we've got type 2, which I would say is pretty much buy-side liquidity. So when we're in a trend, we've got buy-side liquidity at the top. And then also when we're downtrending, for example, we do have sell-side liquidity at the bottom. Now, what this proves is at some point, we're going to be aiming for these highs. And at some point, we're going to be aiming for these lows. Of course, when it comes to liquidity, the main things that we have to understand is that these points eventually are going to get hit, because institutions relieve their orders from there, or they take some orders from that point. You know, we don't even have to get into the whole concept behind it, simply just the way it works. A few other basic points that many people probably don't really think about a lot is going to be trendline liquidity. I personally don't use it as much as some of the others. The stuff that's more relevant to me is the the equal highs. We've got buy side liquidity, and then I've just talked about it right now. It's also imbalances. Now this one is going to be, say for example, the market is moving like this, it's ranging, it boosts up, and then you see it does this type of thing. I would kind of expect that that price in between is going to have an imbalance, and then at some point it would get filled, and then from that point we judge what happens next, whether there's equal highs at the top, whether it's just buy side liquidity, whatever it is, really doesn't matter. But anyways, this is pretty much the basics. So when we talk about the basics, let's see if we can actually get this bigger. When we do talk about the basics, I will just quickly take a note. We've got buy side and sell side liquidity. Then also we've got equal highs, equal lows. Minus spelling because I'm not really here for an English lecture. And then number 3, we've also got trendline liquidity. But some of the main ones that a lot of people do miss is imbalances, and this can also be known as fair value gaps. Fair value gaps, I would guess, is the term that people use mainly when they're using it for entries. But these are the main 4 that we talk about. I've talked about this in many other videos, so I really don't have to get into a lot of the other basics, to be honest. Let me just move up. Actually, let me take a chart that I don't even use, especially when I'm annotating. Let's see where EU is right now, because obviously I'm kind of looking at these charts as we are live trading. But yeah, may have just missed the setup, but oh well. Right, so when it comes to liquidity, the basics people understand, right? But it's now actually putting it into a live sort of strategy that we can actually use. Now, this is one thing that not many people understand, and I talk about this in chapter 7 of the free course. So please, if you do want to access the free course, it's completely down below. Chapter 7 is essentially where you learn all about the liquidity theorems and everything. Very useful. But just quickly getting into that, there's going to be 2 main types. Remember, the market is fractal, right? So whatever happens on the higher time frames will also happen on the lower time frame. So if we have this fractal nature of the market, that means that liquidity theorems can also be applied on all types of time frames as well, right? So for example, if we can apply it on a weekly, we can also do it on the daily. We can also do it intraday, and then obviously, you know, on the lower time frames as well. Now, when it comes to this, obviously in my head, when I was creating my elite strategy, you know, the whole point of the elite strategy is this. I use liquidity concepts and I use the same golden confirmations that I teach to my students, and they can basically use that to get into these trades once liquidity has been taken. So when we're talking about liquidity being taken, there's a few types, right? The first one is going to be the weekly time frame. Now, this one I would say is one of the most important because we can actually frame in our head what the week is going to look like. So whenever the week starts, we look at the previous week. Generally, what we're going to get, let me just change the color of this. Generally, what we're going to get is we're going to get the candle. We've got the body, and then we've got the wicks as well. So say, for example, for the past few weeks, we have been, because it's blue, we're uptrending in this scenario, as you can see. And as we continue onwards, we are pretty much going to expect that some of these wicks are going to happen, and then eventually for price to move upwards, right? So just based on this knowledge, what do we have? We have the entry price, or this is the closed price of the previous week, because we ended bullish, so it's going to push upwards. So this one is going to be the closing price. Then we've got the opening price, which is over here. This is where the market has opened in the previous week. Then we have the low of the week, and we also have the high of the week. Now, just based on these concepts, you can seriously learn a lot about the market. And thinking about it, it really is the foundation of the market. You know, there's not much to know about it. It simply is just about applying it. Now, if we know we've got the high, the low, the opening, and the closing, and we are in a bullish market, so we are expecting that the trend is to move upwards, right? We know that when the weekly candle opens, generally what we do get is we get at some point the wick, which is going to create the low of the week. Generally, this is expected to happen in the beginning of the week. So what we can expect is once the opening price opens for the next candle, so it's going to be here, we can expect that price is eventually going to retrace downwards to some certain area, and then eventually to push up to the high of the week, as you can see like this. And then once that happens, it will give a little retracement to actually close above. So by the end of the week, we're going to get something like this. It opened here, it closed here, it created a low over here, and then it created a high over here as well. Now, based on this idea, this is the weekly liquidity theorem. We are basically going to understand that, okay, price is going to open, we're going to get a low, we're going to get a high, and then eventually it will pull backwards. Based on these ideas, you can actually frame the market in where we want it to head. And so just a quick little side note for those of you that really want to take their trading to the next level. The one thing I always recommend to my students is backtesting and journaling. And the one place I personally use for all of this is Trader Edge. So this software gives you all the access to every single backtesting feature that you need, a whole strategy tester to allow you to put it into different libraries, a calendar, which I believe is actually one of the most essential tools to accurately track your trades and see your progress over time, and one of my personal favorites, the forward testing feature, which allows you to project how a certain strategy will do over time. So if you want to get started with this, click the link in the description to access one of the most trusted backtesting softwares there is available. Now, as an example, I'm going to be talking about EURUSD. This was something that I sent out, to the public Telegram as well. Very, very simple in my head. Something like this. EURUSD, as you can tell, we've actually been downtrending up until this certain point. Now, in my expectations, what I'm kind of expecting is something like this. The opening of the market will create something where it goes like this. It pushes up. Then throughout the week, it continues downwards. And then at some point, we might get some kind of retracement. That's pretty much the way I would frame the market. Always, always, always remember to go on the weekly time frame. So for example, here, we'd go on the weekly. Let's say before we actually got in, as you can see, let me actually just get a cleaner chart just for now. Which one was that, Owenda? Okay, cool. Just trying to get a very clean chart. So when it comes to this, all we're going to do is, for example, we look at the previous week. We can see that, okay, we've been pushing upwards. We've had this kind of retracement down and we're still retracing. So when I was looking at this week, all I would have been looking for is the high pointed out, as you can see. Then we've got the low. And then we've got the opening of the new week. So that would be the close of the previous week and the opening of the last week. Now, since I can expect that this candle has been bearish and we can see that we're having this kind of retracement, I can expect the high of the week is going to come, which it already has come. It's now Tuesday. And then now the price is going to continue downwards to take the low of the previous week. Once this happens, we can expect price to continue further. Now, it's not always going to be the case that price will definitely continue for a lot further, but it can be expected within trending conditions that price will continue to take that low. Now, just moving on the lower time frames, just looking at the 1 hour, we can kind of see this is exactly what's happened. The week, this was the previous week that it ended on. The beginning of the week, as you can see, this morning, we created the high of the week. We are now expanding downwards. And eventually, I expect for this low to be taken over here. Very, very, very simple analysis. And as you can see, something like this. The high to be happening, expansion to the downside, and then eventually some kind of retracement. Now, obviously, at this point, we do have the order block, which is very clean. But yeah, this is my main tip. That's number one. So always look at the weekly candle and you can see the kind of liquidity that comes from that. Again, when we go into it even further, we can also bring this down to the lower time frames as well. When we do think about the weekly candle, we can also apply these concepts on the lower time frame. Now, moving back into that chart, or we can just do it here, to be honest. When we are talking about the intraday, so we've got the weekly, we've got the daily, and then we've got the intraday as well. Like I said, I generally expect for the weekly to have this kind of framing that we've had for liquidity. Then in terms of daily, I can also link that to the weekly. So say, for example, I expect a high. I will expect that during Monday and Tuesday. Then I would expect expansion during Wednesday, Thursday, and then finally sort of Thursday, Friday, it would basically retrace. So getting into the lower time frames, we can also expect this, but it depends on where you are in the day. Now remember, when it comes to the intraday time frame, so we're talking about intraday now, right? Intraday. When we're talking about the intraday time frame, we've got 4 key times that we do look at. Now, the first one for me is going to be Asia range. I'm going to be putting all of this in smaller writing, just so we don't fill up as much. So we've got Asia range. Then we've got London open. We have London and New York crossover. And then finally, what frames the end of my day would be London close. So these are very, very simple concepts that I use. Generally, when it comes to Asia range, what we do expect is something like this. We have consolidation like this. Then when it comes to London open, this is typically known as the time the time in the day that we get the low of the day or the high of the day. This is because when we're in trending conditions, we have this range already, right? We have consolidation. So let's end Asia range right there. Asia range has ended right here. We are typically going to get a low and we are typically going to get a high. Now, based on where we are in the trend, let's just say we are uptrending. So we expect that price is going to continue to the upside. Let me just take these off. So very, very clearly, I'm talking about an uptrending market. So intraday, we are uptrending. I expect for London to create a low of the day. And typically what will happen is price will continue down here to some kind of point and then eventually start to push to the upside. Now, there are a few scenarios where, for example, it pushes to the upside but then comes back down, then it goes up, whatever. That type of day is not going to be the best type of day. The best type of trading day is going to be when your Asia range is very clear. You've got a nice and tight consolidation. You have lows that have been created over here, as you can see. And then eventually we're going to continue to the upside. So I basically expect, so from Asia range, we expect consolidation. And this one, I'm just going to not make it bold. So we expect consolidation. With this one, we expect the fake out of the day. Eventually, for London and New York crossover, we expect some kind of expansion slash retracement. So the reason I say expansion slash retracement is because at times you get something like this where, let's say London still continues to do something like that, and then New York, eventually it will expand it to the upside. Or the second scenario is that price has already done something like this during London. New York, eventually you kind of expect it to retrace, and then you get a further expansion to the upside. Then London close is when price slows down. This is going to mean that price is either going to consolidate, like this, for example, or price is going to continue to the downside and completely retrace for the rest of the day. The whole point of why I am saying this is this. If we relate this to the candle that we talked about, right? So we were talking about the weekly. Now we're talking about the intraday. The intraday is going to look something like this. It will open here. It will eventually close wherever London or the end of the day close happens. So let's just say London takes it to a close about there. The low of the day was created here, as you can see. Created to the low over there. And then the high of the day was created at the top, as you can see over here. This concept alone, honestly, not many people are going to value it as much as I'm talking about. But genuinely, this is what my elite strategy is going to be about. It's all about framing the day. Now, I have a few entry models. I have 3 entry models that I always use. Very, very simple approach. All I look for is my golden confirmations to align with them entry models. And then at that point, that's when I'm able to get into the trades. So imagine, even if, for example, you're not gonna take up the offer or whatever. And by the way, I used to sell it for 200. I'm literally making it as accessible to as many people as possible. It's literally now $49.99. So with that, obviously you get the whole elite strategy from A to Z. You get full PDF guides, examples of what the trade is or the perfect type of entry is going to look like. 3 entry models that we always stick to. Backtesting, I've done, for example, live backtesting for 6 months on video and recorded the whole thing. Ended up, I can't even remember. I think it was like 28%, 35% profit, something like that. Even when it comes to the bootcamp calls as well, I'm doing these twice a month live. And again, so much value over here. A little support Discord as well to help with any questions, queries, anything like that. But again, no one is giving out their full strategy for $49.99. Genuinely, with the price that you're getting over here, I've never seen that much value. And it's a strategy that works every single day. Literally just talking about some of the trades that I've been in the past week and a half. These are the trades that I've literally sent out to my more premium group. Very, very consistent returns. 1 to 3s, 1 to 3.5. As you can see, for example, another 1 to 3, 1 to 3, and literally every single one has been sent in live as well. Obviously, this one's not been done. But yeah, GBP USD, for example, sent out. Again, even Euro GBP sent out live as well, hit 1 to 3. Again, even Euro USD. And this month has been very good. January, I must say, I've taken no losses at all. It's just been wins. Again, that's not standard, for example. You're going to incur losses at times. Again, GBP AUD. The more recent one, Euro JPY, which was actually yesterday, we managed to get a very, very clean 1 to 6 trade. Where can we actually find it? If we go on the 5-minute chart. A very, very simple setup, in all honesty. 1 to 6 trade over here, as you can see. And then obviously sent out into more of the premium group in the personal analysis. So this thing works, guys. Using liquidity theorems is very, very simple. Just walking you through the 1 to 6 trade that I took yesterday. As you can see, clear proof over here, for example, hit take profit, and then entry sent out as well. Very, very simple. The reason I took this trade, as you can see, daily low was taken. This is a concept that I'm going to be talking about in other times. In this one, we've talked more about the weekly time frame, the daily time frame, and liquidity that runs throughout the day, for example. But with this one, it's another concept that we do use. It's something that I am going to teach on YouTube, let's say in the next video or whatever. But very, very simple. As you can see, very cleanly hit. And then eventually price just rockets upwards. This type of thing, it's something that I wish I had a lot further or a lot earlier in my journey. Just because it's something that you want to achieve consistency, right? With SMC, I realize a lot of people struggle with actually getting the consistent entries every single time, because one simple SMC model is something like this. You're downtrending, let's say something like this, and then eventually price does change a character, it pulls back, and then it continues to the upside. Now, in theory, this one is very, very good, right? But in actuality, does it really work all the time? You know, you do have very nice examples, but a lot of the time, for example, it might do something like this, where it hits your entry, goes up, liquidates it, and then continues to the upside. You know, there's so many times where that happens. And in all honesty, before I started implementing and really testing my elite strategy, this is at the point that I was at, to be honest. When it comes to SMC, you are confused and everything. So all you want to do is make it consistent. Have a simple set of rules. 3 entry models is all I use. The golden confirmations, I use that every single time. So yeah, very, very simple as that. So with that, guys, I hope everything did make sense. I just want to go back on the chart that we were marking up a few things. I believe we were on the 1 hour, was it? Yeah, over here. So when it comes to this, please do use these kind of ideas in your own trading as well. Remember the intraday cycle. Asia range, we want that consolidation. London open, we want the fake of the day. New York, London crossover, we want it to expand. And then London close, price actually starts to slow down. I want to keep it as simple as this. No need to make it even more complicated. Genuinely, I hate it when people say, oh, you got to use all these indicators, all these confirmations. All I have is 5 confirmations. I have a set rule. I've got step 1, for example, step 2, 3, 4, and then 5, for example, plus my golden confirmation, which kind of makes it 6 rules. Once I see this every single time and it aligns with either of my 3 entry models, that's when I'm going to be getting into the trade. So it's as simple as that. Guys, I hope you enjoyed this video. I hope you got a lot of value. Again, even if, for example, you don't want to actually learn the strategy completely, which you literally get for $49.99. It's accessible to everyone. You can learn the free course that I have got down below. So yeah, whole 7 modules. We talk about liquidity. We talk about supply and demand zones, all that kind of good stuff that you need, especially for the foundation. But if you want to take it further, this type of thing that I would suggest. But yeah, guys, take care and I'll see you all in the next one.